Here's a number for you, 7,499.36. That's where the S&P closed on the very last day of the first half of 2026. 64 cents from 7,500. A round number every trader on Wall Street's watching right now. Let me zoom out, because the half-year numbers tell a bigger story. S&P up roughly 15%. Nasdaq, over 21%. SOX, 88%. Storage chips alone, 159%. This wasn't a grind. It was a rocket ship running on AI infrastructure spending. If you're new here, subscribe. Full breakdown linked below. Now let's get into the daily chart, because this is where the bigger picture lives. Long-term trend at 7,095. Mid-term, 7,246. Short-term, 7,322. All three rising, stacked like stairs. Lower, middle, upper. That's a clean, textbook bullish structure. No sign of weakening anywhere on this time frame. The upper rail sits at 7,496. Price closed at 7,499. 3 points above it. Not a massive breakout, but enough to say the daily is nudging through resistance. What's missing? Volume. 80 million shares. For context, a normal session runs over 4 billion on the S&P. The daily body was small relative to the prior candles. That tells me this push towards 7,500 wasn't a stampede. It was a cautious creep. Institutions marking their books for quarter end, not loading up for the next leg. Now the hourly. And this actually makes the daily setup more interesting. Upper rail on the 1 hour sits way up at 7,590. That means even after pressing through the daily upper rail, there's still 90 points of overhead room on the shorter time frame. Two rails, two different messages. Daily says we're at resistance. Hourly says there's runway. That disconnect is exactly why Wednesday's 7,500 test matters. It'll tell us which rail the market respects more. So where's the action on individual names? Caterpillar first, because this one's got drama. Closed at 1,064.90, up 3% Tuesday. And Michael Burry just revealed he's shorting this at 1,060. Daily chart is where you see why this matters. Long-term 838, mid-term 894, short-term 979. This stock has been grinding higher in a clean channel for months. Every time it touched the upper rail on the daily, it pulled back. Every time it touched the lower, it bounced. Textbook behavior, until Tuesday. Price punched through the upper rail at 1,037 and closed firmly above it. Volume spiked to 3.2 million, well above the 20-day average. That's not a wiggle. That's a breakout with institutional participation. When a stock leaves its daily channel after months of respecting those boundaries, the rules change. The old ceiling becomes potential support on any pullback. That's exactly what we need to watch for. Now, the hourly confirms the extension. Upper rail at 1,015. Price at 1,064. Nearly $50 above. On the hourly, the short-term trend sits at 1,033. That's your first level to watch if this thing finally takes a breath. Here's how I read this setup. Burry might be right about the long-term valuation. No stock goes up forever. But fighting momentum on a daily breakout with rising volume is expensive. If you're already long, trail your stop and protect the gain. If you're flat, do not short into this fire. The smart play is patience. Wait for a pullback that tests the short-term trend around 1,033. That's where you reassess, not before. Second name, AMD, closed at 589.91, up nearly 8% Tuesday. Wells Fargo raised their target from 505 to 615. That's 14% upside even after this monster day. And the daily chart is something else entirely. Daily, long-term 342, mid-term 493, short-term 543. All three are miles below price. This is not a stock poking above resistance. This is a stock that left its entire trend structure behind months ago. But here's the headline visual. The upper rail on the daily is sitting at $252. Price is at $589. That channel was relevant back in January when AMD was consolidating. It hasn't been relevant for half a year. AMD didn't just break out. It obliterated the old framework and built a completely new one. Volume on Tuesday was 34.69 million shares, confirming institutional conviction. When the daily channel looks this destroyed, you're not trading a breakout. You're trading a stock in the middle of a structural re-rating. Different risk profile, different expectation. But we don't trade the daily. We enter on the hourly. Long-term 492, mid-term 518, short-term 541. Upper rail at 539. Price at 581. 42 points above the hourly rail. That's extended, but less extreme than CAT. If you missed this move, and let's be honest, most of us did, the 540 zone around the short-term trend and upper rail is where you wait. That's your potential entry on any pullback. Stop below 500, at a level that respects the hourly midterm trend. Let the broader semiconductor momentum handle the upside. This is a trend-following setup in a sector that's delivered 88% in 6 months. You're not betting on the stock, you're betting on the sector tailwind. 2 risks before I wrap. First, Friday's jobs report. Second, Thursday, July 3rd, Independence Day. NYSE closed. Shortened trading week means holiday liquidity. Thin markets amplify everything, both directions. Manage your size. Know your stops before the open. My Wednesday read? Simple. SPX at 7,500. Breakthrough with volume. Bulls control into the holiday. Reject here. Expect a quick pullback to test that 7,202 daily short-term trend. Either scenario is tradable, but only if you have the plan before the move, not after. That's the H1 wrap and what I'm watching Wednesday. Charts and levels in the description. Subscribe if this helped. Trade safe.